Hello everybody, and in today's daily video we are going to talk about the S&P 500 on the log scale on monthly. There is two major points I want to make in this video. Point number one is that when you look at again S&P 500 on the monthly log scale, when you connect the top of the 1929, just before the Great Depression, when you connect that top with the dot-com bubble top, you get this fat red line, and this fat red line, just look what happened in Q1 2025, Q4 2024. Look at that. Like we have closed on it, touched it multiple times, and then we had the flash. Well, now it looks like a flash crash, but it was a Q1 crash of this year. And now we have broken above this red line, okay? And this is the first time in 100 years we have broken above this. So my point number one that I'm making to you on this video is, do not be surprised if you will see on monthly, this is monthly, so within the month we can have lots of fluctuation. If you see on monthly acceleration to the upside after breaking a resistance like this, don't be surprised if you see that. And the point number two I want to say is these Fib levels. So what are these Fib levels? What is this Fibonacci measurement? Again, I'm using now logarithmically adjusted Fib tool, so that's very important. And when I measured basically the decline of the Great Depression, okay, that was like 70-80% in 1930s, in early 1930s, you get these Fib extensions. Look at the number one, the 1.618 extension. That was the 60s, 70s resistance, and then it turned into support. Number two extension, that was the 1987 market crash. Then it turned into a support. Look at the 2.618 resistance. That was the 2000 bear market, by 2000s bear market, when we basically came back there twice and held it as a support and bounced from it. And look at the next 3.618 resistance, where we also, it was a resistance there, it was a confluence, then we rejected, and now we are above it. So my point number two is that 6,000 is going to be the bottom of the next bear market.